All right. So today we're going to be having episode 2 of how to trade the right way for extra source of income. It's not going to take long, I promise. It's not going to take long, but I need you to get out your pen and your notepad. I need you to get out your pen and your notepad. All right. It's going to be very brief, but you will have the chance to ask questions. All right. You will have the chance to ask your questions after class. So today we're going to be talking about risk management. We're going to be talking about risk management. All right. We're going to be talking about risk management. What is risk management? And can you do this? Yes, you can. Trust me. I'm telling you that we have people that didn't even go to school making millions in Forex. I mean, we all know that most of the rich people or the richest people in the world today didn't even attend or see the four walls of any college or even any school. Most of them have employed the most intelligent people in the world to do the work for them. So trust me if I tell you that trading should be in schools right now, or it should just be like reading and writing. There's no big deal about it. So yes, you can do this. I'm going to be talking about summary on pips and lot sizes. A lot of people miss the class. It's just going to be summarized. And then I'm going to explain how you should understand risk to reward and teach you how to use position size calculators, all right? Then we'll be talking about strategies that have the best risk to reward ratio. And we're going to take some trades if you already know how to. If you don't know how to, please, you have to go back to the last masterclass. It's on my YouTube channel. I sent an email to everyone that is on my email list. All right. So, but most of the people I see here know how, and I can see my mom. Great to have you here, Mom. So everybody that has not learned how to take trades, you can go back to my YouTube channel. The last masterclass, I taught everyone how to take trades. That's for beginners, all right? So we're going to take trades today. Today is Saturday, so only cryptocurrencies trade during the weekends, all right? So we're going to take with the strategy that I have been talking about, the number one strategy in the world that works for stocks, cryptos, and Forex. All right, then we can call it a day. So what is risk management? What is risk management? It is a skill in Forex where you can encounter losses in the market without blowing your account. When I say blow your account, I mean run it down. You see some people, $1,000. Now, they've blown it. It means that from $1,000 to zero. Yes, it happens. And trust me, if you want to be successful, you will lose some money. But then if you have the right mentorship, you will not lose so much. My mentor lost only $4,000 to the market, and he's been teaching for 7 years. He's been teaching and trading for 7 years, and he lost only $4,000. You will hear people that will tell you, hey, they've lost a whole house, they've lost a whole land. Well, if you convert $4,000 here in Nigeria, it's somebody's house and somebody's land. But trust me, you can actually scale that fence. Trust me, I have seen it and I believe it. I started mentoring somebody, and in 4 months, she was able to break through. So let's continue. You will encounter losses. You just have to ready your mind that you will encounter losses, just like any other business, all right? It's like any other business. There are no businesses without losses. But now how to manage your risk is what makes you different from the trial and error trader. How to manage your risk makes you different, makes you stand out, okay? So you're going to encounter losses, that is for sure, all right? Now, can you do this? I need you to have the abundance mindset. I need you to get into this like you are already a millionaire. Because trust me, if you come in here like you are very hungry, you will see yourself losing more to the market. If you come in here with gra, I must make this money. It is me and Forex today. We are going to die here. Trust me, you are the one that will get hurt, not the Forex market. You will keep losing money and you'll be wondering. So I need you to come in as a winner, as somebody that has seen money before. There's no big deal. Let me just come in here and learn an extra skill. Because trust me, every one of us started like that. Boom, 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 boom. Let us make this money. And then we encountered some, uppercuts from the market. So you don't want to experience that. Coming with the abundance mindset, I can do it. You need to believe that you can do it, and you need to believe it. So you have to desire what you need. You have to learn the skill, which is what I'm passing on to you right now. And you need to believe that there is nothing to it. All right? Give yourself time and let God do the rest, okay? It's not hard. Trust me, it's not hard. So I'm just going to summarize on what pips and lot sizes mean. Pips means percentage in points, is a measurement of change in value for currency. So when you have dollar becoming from dollar to naira, let's say $1 equals to 700 naira, and then it moves up. Let's say it moves up by 2 pips, and probably 2 pips is 100 naira extra. That means it is now what? $1 to 800 naira. So pips is like a measurement of value in currency. When the exchange rate goes up by some particular movements, that movement is calculated in pips. All right, we already know that in Forex for most of us that are here. Lot size is the amount of money you're willing to pay for some units of an asset. It's the money you're willing to risk in the market. All right, it's the money you're willing to make business or do business with the Forex market. All right, so we're just going to rush over this because this is something I already did in my former webinar. You can find it on my YouTube channel. I will send an email if you are on my email list. In fact, all the emails I've been sending have links to them. So how to calculate pips? For example, especially for USD pairs, it is calculated from the 4th decimal place. You can see the example. If it moves from 1.3500 to 1.3505, the difference after the decimal point, 4 units after the decimal point, it means if you do the difference, if you do the calculation, minus 5 pips. So it has moved 5 pips up. It has moved 5 pips up, or plus 5 pips, all right? If it goes the other way, you can see from 400 to 350, that is minus 50 pips. So you have a decrease in 50 pips. It's not hard. That is how to calculate movements in the Forex market, okay? For JPY pairs, it is calculated differently. You can see it has two decimal points. So it's like after the decimal point, you still have 2 figures, all right? So the difference between those 2 figures is your pip movement with JPY pairs. See example of JPY pairs. They are called Japanese yen. That's what they are called. So just don't worry, go back to my last masterclass. This is for people that have actually watched it. And even if you have not, just keep your mind open. You will understand what I'm trying to say. So when USD JPY moves from 100.10 to 100.15, that has moved 5 pips, an increase of 5 pips. So that is how we measure pips, and that's how we measure movement in the Forex market. So AUD JPY, on the other hand, is also a JPY pair. Look at that, from 88.300 or 300 to 88.150. You just do your minus and your subtraction right there. And what do you have? 15 pips. All right, remember, it's just the subtraction of the 2 decimal units after the decimal point. So remove that 0 there. So it's just 30 minus 15. You understand? So I'm trying to rush over this because this is not what we have for today. I'm just trying to summarize so that you can understand where I am going to. All right, so that is what it is called, movement in pips. Pips is points in percentage, all right, or percentage in points. So lot sizes, there are 3, like we have different types of investors in the market. You cannot, if you're just starting, you cannot be competing with people that have money. Someone that has 100K in his account will not be entering the market like someone that has 10,000 naira or $10,000 in his account. So like I explained earlier, lot sizes, these are this is the kind of money or the amount of money or the amount of risk you're willing to take in the market. So there are three major types of lot sizes you can take. We have the standard lot size, which means that you're making $10 per pip. We have the mini lot size, which means you're making $1 per pip movement. And we have the micro lot size, which means you're making 10 cents per pip. Now, I need you to write this down, especially most of us that have already been trading. If your account, that is your trading account, is not in dollar, you are making the quotes. You are making the quotes pair. So you can see when we have USD JPY, or when we have, look at GBP USD. When you have GBP USD, USD is the quote currency. That is the Great British Pound against the US dollar. US dollar there is the quote currency. So what you're making on your account is in US dollar. But if it was not US dollar, if it was CAD, what you are making is CAD that is being changed to dollar in your phone or in your broker. All right. So whatever you are trading, the quote is what you're earning, but then it is being changed to what is in your account. So if I have dollars in my account, if my currency in my account is in dollars and I'm trading GBP CAD, I'm making Canadian dollars that are being converted to what? US dollars. So if it was GBP CAD, my standard lot size, I'll be making 10 Canadian dollars. I'll be making, for mini lot size, I'll be making 1 Canadian dollar. For micro lot size, I'll be making 10, what's this thing for? I think it's 10 Canadian cents. I really don't know, but I hardly trade Canadian dollars. All right. So that is what you're earning that will now be changed to dollars because my trading account is in dollars. It is that easy. So for example, if I trade GBP USD with 0.1 lot size and it moves 15 pips in my favor, it increases in 15 pips, I'm making what? Can somebody put it in the chat box? Let's be fast. I want to see people that can calculate. Oh, I already put the answer there. I hope I didn't put that answer there. All right. I want to see people that know what I'm saying. Remember, 0.1 lot size means you are earning how much? You are earning $1. So standard lot size is 1.0. Mini lot size is 0.1. Micro lot size is 0.01. Okay? Write that down. Standard lot size is 1.0. Mini lot size is 0.1. Micro lot size is 0.01. All right. Let me see the chat box. Let me see the chat box. Let me see the people that are killing it in this class. Let me see the people that are killing it in this class. All right. Angie said $15. Angie said $15. Is that true? Angie, you are correct. Your answer is $15. So I am making $15 because it has moved 15 pips in profit. Okay, so that's how to calculate pips and lot sizes, okay? So because I came in with what? A 1.0 lot size, I am making $15. Somebody that came in with a standard lot size will be making how much? Somebody that came in with a standard lot size will be making how much? $150. So we might all enter the market, but you know when they say cut your coat according to your size, all fingers are not equal. That is what happens. All right, on to the next one. So we need to understand risk to reward ratio. This is where we come in now to learn what we have for today. All right. This is a ratio of what you plan to risk to how much you plan to make in one trade. All right. For example, if I have $10,000 in my account and my strategy has 50% win rate with a risk to reward of 1:3, there's something I want you to understand. Your strategy matters in risk management. If you're using Begbe strategy, ladies and gentlemen, I'm sorry for you. I'm sorry for you. So at least you should have 50% win rate. So that is why if you learn about any strategy, you have to try that strategy, backtest and keep backtesting to understand, to understand the win rate. If I lose, because you will surely lose. All strategies are never perfect. So you will lose. You need to know how many times I'm losing with this strategy versus how many times I'm winning. So if you calculate it and you see, I'm making over 50% win rate, that's a good thing. That means that your strategy is good. All right. So imagine that I have a strategy that I win 50% of the time. Every time I use that strategy, I win 50% of the time. Okay. And then every time I win, I know that my strategy permits me to make, let's say if I'm risking $100 in the market, I am going to be making $300 with that strategy. So it means that if I risk one, I'm making three. All right, that is what the strategy permits me to make and lose. So if I have a strategy that has 50% win rates, and I know that if I enter trade with that strategy, if I enter with $100, if I don't lose that $100, I'm going to make $300. That is what it means, your risk to reward ratio. So let's assume the outcome of the trade is, it's 50% win. So you can lose. If you lose 2 times, you can be expected to win twice. So it's 50% win rate. So let's say I entered this trade. I had $10,000 in my account. I entered this trade. The first one, loser. Second one, loser. Third one, loser. All right, then I start to win the trade. I start to win. You can see that, okay, I have lost $300, but what? In one trade, I have made it back. I have made 300, and then I take another one, I have made 300, and then I take another one, that's okay for me for the day. I have made what? $600. So even if I had lost $300 and I won the next time, because it is a 1:3 ratio, I am now making $300, and I've made $300 3 times. That means what? I have made $900, but I lost $300. That's 900 minus 300. I have made $600 for the day. Tell me, what do you think? Imagine you had that kind of strategy in the palm of your hand. Even if you lose per trade, you will always have a successful day. Do you get? Now, how you risk is what matters, which is why we are here, risk management. So if I had risked, imagine if I had risked like 5% of my account for each trade. Imagine, that would be 500, 500, 500, 500 4 times. Come on, would you even have the morale? And probably you're almost at the end of the tunnel. You know when they say you're digging, and then just one more try, you go make them. You now say, oh, I don't have the morale. Just like that, I have lost $2,000. I beg, let me go and sleep. But if you are taking that next one, probably you would have made 1,500 because that is your strategy. But then look at somebody that had risked only 1% of her account, which is 100, 100, 100, is better than somebody that had risked 500, 500 because morale will fall. So when I mean morale, your morale will drop. Of course, your morale will drop. When you see that out of 10,000, you've already blown 2,000. What is going on here? Fear will come in. Fear will come in. And if you are the very stubborn type, you will be fighting to what? To make your money back. You won't be thinking straight. So good risk management helps with balancing your what? Emotions. Good risk management helps to balance your what? Your emotions. Once you have good risk management, trust me, your mind go there chilled. Because come on, I have $10,000. If I risk 300 naira, $300 is nothing. I can keep trying. And probably I've decided, okay, today I'm willing to lose $500. So I'm ready to keep going. So you have to know how much you're willing to lose before you enter any market. Then when you know how much you're willing to lose, you know how much you are willing to risk per trade. So if I say, okay, today I'm willing to lose $500, come rain, come shine, I now enter because it has not reached $500, 100, kilo day. I can still roll for 2 more times. So you see, when you go with a lower risk per trade, you have more chances of trading. You have more chances of what? Trading. So imagine if you had lost $2,000, will you still have the morale to go on? Even if you have the morale, fear would have come in and you will stop thinking straight. All right? All right, so I now want to explain to you there are ways you calculate your risk. You don't have to use your head. All right? You don't have to use your head. This involves how to know the right lot size, because that's the problem. A lot of us don't know the right lot size to enter. We do trial and error. I know that if I enter with 0.5, the money go plenty, but you're not thinking of your losses. All right, you're not thinking of your losses. Professional traders, trust me, they risk 1% of their accounts per trade, because you're going in with money. Oh, it's like a business. You have to treat trading like a business. You cannot be going in blindfolded, or you're going in with vex. You will come out wounded because you don't have any control over the market. So professional traders risk only 1% of their accounts per trade. You should emulate that too. For example, if I have 100,000 in my trading account, 1% will be what? $100. Do the math. That would be, if I convert $10,000 to what? If I convert $10,000 to percentage times 1, that's $100. All right? So that is 1% of my account. So imagine each time I am trading, each time I enter the market, I'm willing to lose $100. It won't shake me. You know, go pinch me, if you know what I mean. It will not hurt me at all. What is $100? I can keep rolling because I've decided, okay, if I'm going to lose $500 today, that's fine. Let's go. So that is how to know how to, manage your risk. Let me just be rolling with small percentage so that I will have more chances in the market. All right. So there are position calculators that we use in the market. One of them is the FX book. There's another one, the Nash calculator. There are so many. So if you're coming in and you're a newbie or you're intermediate and you don't have the strength to be using brain to calculate this thing, there is something called my FX book. All right. And I'm going to be showing you that right here. I'm going to be showing you that right here. Let me just put this down. All right. So right there. So I'm just going to open my trading, my browser, which is here. And I'm just going to type my FX book. All right. My FX book. Everybody should have access to this. Everybody should have access to this. And I click here. All right. Now I can look for position size calculator. I can look for position size calculator. Where did I get it the last time? Yeah. Do you see FX calculators right here? FX calculators, and I click. All right. FX calculators. There's a place I normally go direct. There's a place I normally go directly. All right. Let's see. Currency convert. See different types of calculators, right? You have the profit calculator. You have the leverage calculator. Look at that. This is the one we are coming to check. You have the compounding calculator. So many calculators. Some people that are very good with Fibonacci, that want to use the Fibonacci. For those that are already trading, look at them. So this is the one you need. Position size calculator. I want to know how much I can risk with what I have in my account. And then different pairs have their different ways of risk. So the way somebody that will make money trading gold is different from you that you're trading GBP USD. So different ways. So you click on position calculator. All right. So let's say, for example, Euro USD. All right. And my account currency is in US dollar. Right. My account currency is in US dollar. All right. And let's say I have $10,000 in my account. All right, so I just put it in there. It is free. This is free. You can actually do this before you enter any trade. All right, and the risk to ratio reward, I want to just, per trade, 1%. All right, per trade, 1%. And let's say I have already calculated that, okay, this is the amount of pips that, I'm willing to risk. So I want to lose only $100 in the market. I know 20 pips will give me $100 with the calculation I taught you guys already. And let me say, okay, 100, let's say it is 20 pips that will give me $100. Okay, the 20 pips movement will help me lose only $100. So I'm willing, stop loss, I'm willing to lose $100. So if I've calculated my pip to know where my stop loss will be, because I'm willing to lose only $100. By the time I done what I taught you earlier, I know there's only 20 pips I need. Oh, okay. Then I now click calculate. See, it has told us how many lot sizes that we should use. It has told us how many lot sizes that we should use, which is 0.5 lot size. Is that a mini lot size or a micro lot size? I need to know those that are in my class. Is that a mini lot size or a micro lot size? Is that a mini lot size or a micro lot size? Let me see the people in my class. 0.5 lot size is what? It's a mini. Faith, thank you so much. That is a mini. Thank you, Elijah. That is a mini lot size. So you see, you don't even have to think about it. Once you know how much you're willing to lose and how much percentage it will cost, I mean, how much pips it will cost for you to lose that $100, that is it. You just calculate. It will do it for you. Okay? Or there's another way. Let's say in the trading view, let's go to trading view. Let me show you something. All right. So my favorite pair to trade is usually GU, US 30, GU, US 30. All right, so sorry about that. GU, US 30, and gold. And sometimes US oil, but okay. So US 30, let's look at gold. Let's look at GU, sorry. Let's look at GU. Although none of these are trading right now, let's look at GU. My New York session, GU. All right. So another way to check for your, okay, I already drew. So imagine, okay. So my strategy actually is 85% win rate from the last time I backtested. So let's say I plan to take an entry here, all right, for a buy. I want to take a buy. Remember, you buy, and when it goes up, you're making money. You sell, and when it comes down, you are making money. So this is an uptrend, and we know that we want to be buying in an uptrend. We want to be buying in an uptrend. So there was a pullback, and I entered here, all right? This looks just like my strategy. In fact, I won't even think about it. Once I enter here, this is my what? My stop loss. This is my stop loss right here. So I'm just going to turn this to red so that you know that is where my stop loss is. So I plan to enter here. I plan to enter where? This place. So let's say I plan to enter here for a buy. I'm just going to turn this to the golden line. I'm just going to turn this to the golden line. All right? All right. So this is GU. This is GU. And if I'm entering with a what? This is GU, and I know that, okay, this is what my strategy permits. And where am I planning to take my profit? Where am I planning to take my profit? Let's say I'm planning to take my profit where I see equal highs, which is here. I'm planning to take my profits here, okay? I want you to look at this. I have seen this. I have seen that, okay, this is how my strategy has permitted me to take an entry here. This will be my stop loss, and this will be what? My take profit. Take profit is the profit I'm planning to take home because I'm planning to buy. So if I'm buying and it goes up, I'm making money. So if I'm planning to buy here and it reaches here, it means I have made some money. But if it goes against me and comes back and comes down, it means I have lost some money. All right. So all I need to do is, okay, I have seen where I want to make money. Let's say that this has not happened. Let's say that this has not happened. All right. Okay. And I say, okay, this is where I plan to take my trade. It hasn't happened yet. So I'm planning to take my trade here. And I know that I'm trying to conquer here with my TP. It has not happened yet. So there's a ruler right here, trading view, there is a ruler right here you can use to measure the amount of pips, all right, from here to here. Sorry. So, amount of pips from here to here, right there. This is telling you 22 pips, right? It is telling you 22 pips. So this is what you pick. You go and pick the ruler, measure here. So my stop loss, it is giving me, my strategy is giving me 22 pips loss. All right, that's what it means. It means that my strategy is telling me I should actually be targeting to lose 22 pips of this trade. But then it's also telling me from here to here, I will be making what? 36 pips in profit. It is almost times 2. So this strategy here is giving me 1:2, meaning if I lose 100, I'm going to make 200 if I win it. If I lose, is either I lose 100 or I make 200 out of this strategy. All right, that's what it means. There's another thing you can use, but anyways, to get that place, remember, this is what we are trying to get so that we don't get confused. This is what we are trying to get. Sorry. This is what we are trying to get. I have to put this down so that I can see. All right, give me a second. Remember, why we are using that is because we are planning to get this. We are planning to get with this. So what is your stop loss? My stop loss was what? 22 pips. My currency pair was what? GBP USD. Let's look for GBP USD. We put it in. Of course, what is in my trading account is in US dollar. And my account size is $10,000. And I say, okay, I want to risk only 1% per trade. I put it in there. I have already, so you know that before you enter your values, you've already plotted, you've already done your technical analysis. You've already used your strategy to know where you want to reach and where you want to stop. All right. So I've put 22 pips for what? Loss. My stop loss is 22 pips loss. Let's calculate. So it is telling me that if I'm entering the market, my lot size should be what? 0.45 lot size. Mary, that is what it is. And a lot of us, we keep breaking our head. Hey, God, how much lot size? You see us guessing. Some of us say, let's just enter with, hey, 10,000 is a lot of money. Let us enter with one standard loss. It run you. Because there's something called spread. If spread show you pepper here, you would not like yourself. So you have to use your calculator. So this is how to use it. You put the currency pair you're trading, just like what we see here. The currency pair I'm trading is GBP USD. So I put it in here. And then my trading account is in dollars. So USD, you can see there are others. You put it there. Remember what I told you? So account size, 10,000. Risk that I'm planning to risk for that particular trade, 1%. So I put 1%. I now enter my trading view. I've seen what it is showing me. It is showing me that from here to here is 22 pips and from here to here. So I'm just going to do this. There's another way. If I'm planning to buy here, there's something here. Okay. You go long when you buy. So if I click long here, you see, it is showing me my risk to reward already. So this is where I plan to lose, and this is where I plan to take profit. All right. So this is showing me, this is like a 1:2 ratio. Like I showed, this is almost 2. If you do 1.69, this is 2. So this is 2. It means 1:2. That is what I'm planning to risk. 1:2. That is what I'm planning to look at it. Risk to reward ratio. That is what I'm planning to lose. I'm planning to lose. I'm planning to win. I'm planning to win 2 to lose 1. All right. So meaning that if I enter with my money, I'm ready to lose $100 if it goes against me, but I'm willing to win $200 if it goes my way. All right. So now you know how much you should enter in your MT5. You know how much you should enter your MT5, 0.5 lot size. You're not just going to just enter and say, well, let me try my luck. You're on the wrong side of the game. All right, so let's go back to our, let's go back to our slides and we continue. We're still going to take trades here. And trust me, if you stay till the end of the class, few people are worthy of winning something from me. So stay to the end of class. Trust me, I'm not going to give this recording. If you think that you can leave and you'll get recording, you run your no recording for you. So stay to the end of class and you shall be rewarded. All right? Good. And my old mentees, if you're not recording me, you're wrong. If you're not recording me to post on social media, you're wrong. So let's continue. All right? So I'm just going to go back to my slide. For those that are coming late, well done. Oh, you know yourselves. All right, so on to the next thing. I hope this is not blocking our view. Let's just shift it to the side. All right. So welcome to the reversal strategy for any market. Trust me, this reversal strategy, you have to now look for strategies. There are so many strategies, you don't even have to use mine. There are so many strategies that will give you 80 to 90%. Meaning if you lose twice, the rest now win they go. All right. You have to look for strategies. You have to look for strategies. You have to look for strategies that at least 80% to 90% win rate. I have seen a strategy that is 97% win rates. Trust me. There are mad strategies in this, our business, in this Forex, that will give you 97% win rates. People don't know about it, but don't worry, stick with me. I'm going to show you how we do this, all right? I'm going to show you how we do this. So you have to look for strategies that work best. 50% is okay, but it's not so good. It's not so good because you don't want to roll the dice and win. Out of the 10 times you try, it's only 5 times you will make money. Ah, come on. Some people are rolling only 3 times and they've won. They've already, in fact, if they lose once, they've won. Some people are rolling and they hardly lose. They hardly lose. They might just win. They might just win once. That one time they roll and that's it. So guys, you have to look for the strategy. There are so many proven strategies that, you know, can give you a 97%. I know a lot of them that work. But this #1 reversal strategy, don't worry, I'll just keep quiet there. If you want to buy the course, I have the course that you can buy. It's just 20K. It's going up by the end of this month. It's going up to 50, 60K, $100. But if you feel that you already know how to trade, use your strategy, stick to your strategy, ride or die. That's how to make it. Don't say, this strategy is not working today. I'm not going to use it tomorrow. Let me use another strategy tomorrow. No, you're shooting yourself in the leg. Stick to your strategy, ride or die. If you lose, use your strategy again. If you lose again, use that strategy again. You lose again, use that strategy again. That is how to win. But if you keep jumping from strategy to strategy, my brothers and sisters, sorry, Oyo is your what? Middle name. So let us trade, all right? Let us trade. I'm going to be showing you this on my... Oh, I already did this. So let's see. Let's use, because right now it's cryptos. Don't worry, we'll enter cryptos. I know a lot of you here want to trade cryptos. I can see them. They want to make money already. They want to make money already. All right, so I've already structured out where I plan to enter this trade. I've already structured out where I'm planning to, and I said, okay, this is an old trade, so I already know it's going to be in profits. All right, so imagine you can also trade on your trading view. All right, there's so many. This is paper trading. There are so many other ways you can trade on trading view. All you need to do is hook up your broker to your trading view, and then you can start trading on your trading view. There are so many ways, all right? Just hook up to my last class and you will see them. So imagine I'm waiting here. I'm just going to play this. I'm waiting for this to come down here and I will buy, right? That's what I'm waiting for, so that I will buy. I just want to move this so that I can see road, because I'm not seeing road. So, okay, now let's play. Let's make it not too fast. Let's play. So this is actually it's a strategy I use. So I buy here, and you can see I'm making money. This is the longest contract size. This is like 0.001 lot size using your trading view. So you see you're making money, and then I will just flatten where I want my TP to be. All right. I want my TP to be there, and I flattened it. And yeah, I made $3 with that trade. That is how, you know, it works. So, but let me show you. Let us enter a current trade. Let us enter a current trade. Let's enter a current trade with this. Let's enter a current trade with this, all right? So I'm just going to stop this replay. Okay, so I'm going to stop it. Yes. So let's go to, for those that like to trade, cryptocurrency is what we'll be trading over the weekend, and we are in the weekend. All right, cryptocurrency is what we are trading on the weekend, and we are on the weekend already. You can't trade Forex pairs in the weekend. So we're going to trade something today. I promised that already. So let's go to cryptos, BTC. BTC. All right. Okay, right now, those of you that have already bought the course, you can actually trade your cryptos with the course, okay? Don't be scared. It works. So I'm just going to remove all the drawings. So I usually start from the daily, weekly, daily. So I go to my weekly. This is where you check for your what? For your time frames, all right? Check for your time frames. All right, so this is the weekly, okay? On the week, we can see that it's already dropping. It's dropping. You can see that candle there showing you is dropping. Now, the question is, where is she going to drop to? Where is she going to drop to? If I'm looking where she's going to drop to, I always like to pick either the former candle or where I see equal lows. And I see equal lows right here. All right. So that is where she plans. So using the weekly, this is what I see. All right. But it doesn't mean it will be the same on the daily. Now let's go to the daily. All right. Let's squeeze it in. Don't worry, just put all your questions in the chat box. I'm going to answer them, okay? Put all your questions in the chat box. We're going to answer them. We just want to take a trade so we can do our question and answer. So what are we seeing? What are we seeing? On the daily, we see that she's cleared some liquidity. For those of you that are my traders, we can see she has taken out the equal lows down here. All right, and the next way is to start moving up. So you can see on the daily, she's already going up. That is for the daily. Let's look at what's going on in the 1 hour. All right, on the 1 hour, all right. In the 1 hour, look at that. Take note of your trends. So on the 1 hour, what did we find out from the daily? What did we find out from the daily? Who can put in the chat box? What did we find out from the daily? Can you remember? Can you remember what you found out on the daily? Don't forget these things. You can journal. I explained that people should be journaling when you're taking trades. So I always have my notebook. So write down what I'm seeing on the daily, what I'm seeing, because you can't remember all these things. Are you a machine? Can't remember all these things. So on the daily, we see that she has cleared liquidity and it looks like she's going back up. So with the daily, we see that she's going back up. 1 hour, she's going up. This is where she started going up from. Now I have seen what's happening. What do? I mark out where she started turning back from. She started turning back from here. This is where she started turning back from. I mark it out, right? That's hard. It's not hard. I've marked it out. This is where she started turning back from. That's fine. Now I'm coming down to a lower time frame so I can see where I can enter this trade immediately. All right. So 5 minutes. Let's go to 15 minutes. 15 minutes. All right. 15 minutes. Let's see, 5 minutes. All right. This looks good. This looks good. It looks good. So on the 5 minutes, I see that she's been coming down. She's been coming down. Let's start from here. She's been coming down this way. She's been coming down this way. Right? You can see she's been coming down. There. There. Let me open this more to this lowest part. All right? Let's open this more so we can see. So this is what she did. So we can see she kept coming down, and she came down to the lowest point before she started turning back. Now, all the places she's coming down, I mark where it pushed her down. So this pushed her lower. This pushed her lower. I'm marking out my levels that pushed her lower. I'm marking out my levels that pushed her lower. I'm just showing you this because my charts are usually clearer than this. I'm just showing you. I mark out the places that pushed her lower. Now I see she's turned back. Remember, we marked out here for where she started turning back, and we see that BTC has turned back and she has broken the first line. She has broken the second line. And of course, if I'm going to wait, I'll be waiting for her to retest this line, which is what she did. So she went up, broke this line, came back to retest the last. People would have entered from here for a buy. Okay, she broke this one, came back to retest. People would have entered here for a buy. Okay, now she broke this one, but not completely. Not completely. So you have to be careful. Not very well. You have to be really careful. Open up your charts to see, okay, she actually broke it. Fine. That's fine. She actually broke it. She actually broke it. But guess what? She also broke it coming back this way. This is tricky. She broke it back up. Okay. Now I'm looking for how we can enter this trade. I'm targeting a buy, to be honest. I'm targeting a buy. People that know what I'm doing know what I'm doing. So I bring out my Fibonacci to measure the move and where I feel she's going to bounce up from. And she's going to bounce up from. Okay. Let's see. All right. Going down to the 1 minute. 1 minute, let's see. We're looking for trades to get in. People that enter from buy here. Oh my God. That's exactly what I would have done. This trade is not ready. Oh my God. This is where we would have entered for that trade. And she's already moved. She's already moved. Let's catch something on the 1 minute. Let's catch something on the 1 minute. She already moved. Oh no. She already moved. She already moved. She already moved. She already moved. Now she's consolidating. Let's look for another trade. It's almost 1 hour. We're almost 1 hour into this. 1 hour into this. They all move the same way, especially Ethereum. So let's go back 1 day, daily, weekly. If not, if we don't see anything, we'll make do with what we saw before. And I will show you how to put in your stuff in your calculator. In fact, I think that's what we should do since we are not seeing any trade today. We are not seeing anything tangible. Nothing is ready, to be honest. You don't want to rush into trades and go and lose money. All right, this is the weekly. Let me just clear this. The weekly, all right. She just cleared that. She cleared that. And now we know she's coming back down. So if she's coming back down on the weekly, let's go back to the daily. Let's go down to the daily. Top-down analysis, guys. Top-down analysis, very important. So on the daily, yes, she's looking good. Like she's coming down. All right, she's selling. Ethereum looks good. She's coming down on the daily time frame. All right, so she's coming down. Let's come back to, all right. But she didn't break that. Okay, she did. All right, so that's the daily. Now 1 hour. So what did I teach you about the 1 hour? The 1 hour, you mark out your what? Charts. And the 1 hour, you mark out your charts. Just mark out your charts. I'm trying to open this. Sorry, guys. At the same time, this thing is blocking me seriously. Okay, that's better. All right. All right. All right. So beautiful. Okay, so on the 1 hour, this is what we see. You see this. As a newbie, please stick to your 1 hour time frame. Let's see whether we can find something here. Whether we can find something here. This is what we see. All right. Let's see whether we can find something here. Okay. Selling came down all the way, came back up to sell. Okay, let's join this sell. Let's see. Ethereum seems to be working fine. Ethereum seems to be working fine. Let's join that sell. All right. So on my 5 minutes, what is my strategy giving me? I'm going for a sell. I'm going for a sell. Oh. So if I'm going for a sell, I'm going to get this done with. All right. You can see this is also like 1:2. You can see this is 1.76. If you round it off, that is 2. So this is 1:2. All right. This ratio is telling you 1:2. So I've seen, I want my stop loss to be here. I want my stop loss to be here. Could even be lower. Yeah. So this is like 1:3. Now I know where my stop loss is going to be. What do? I enter FX book. I don't know if, okay, currency pair. This is FX calculator. Okay, let's see. Let me see if she can. Because there are other ones that actually do. There are other ones that, oh, this is just FX. So cryptocurrency people. There's another one they know as Nash calculator, Nash app. Position calculator. I wonder if she's still available in the market or they started selling it. Let's see. Let's see. Let's see. There's another one that people that trade cryptos can use. Okay. I don't know if, I think they started selling it though. I wouldn't be surprised. I wouldn't be surprised if they started selling it. Everything now to make money. Trading products. I doubt. Let's see. All right. Let's see. I believe she has started. You can download this as well for those. So look at how it looks here. So all you need to do is come here. My account balance is 10,000. Then select the account leverage. What's the account leverage? Okay, select your account leverage, which is, if your account leverage is 1:500, that is a different thing. You put it, it's usually 1:200. You put it there. Your risk is 1%. Your risk amount to tell you, because once you put your 1%, it will write 100% here, $100 here. All right. Then if you're going short, which is for sell, you click short here. But that's after you have selected your asset. Now it is here that you pick your cryptos. It is here you pick your cryptos. And once you pick the asset class, you select the particular crypto you want to sell or buy, because we want to sell. So it will be Ethereum USD, Ethereum USD. And we already know our stop loss price, which is from here. We know that our stop loss price is what? Which is here? 1882.38. So you put it here. This is where you put your stop loss. And then you calculate. So, all right, that is if you're using MT5. It will help you calculate your lot size. That is how to use Nash. So Nash right now, let me see if she's here. App.nashmarket. App.nashmarkets. That's another one for people that like to trade cryptos. Okay. I think I talked about this particular one in my YouTube channel. App.nashmarkets. Okay. Enter. Let's see. Let's see if .nashmarkets. Okay. .com. Okay. Let's see. They've started. Okay. Let's see. Oh, this is another one. This is baby pips calculator. So you see, there are many types here, many types. Anyways, let's enter our trade. Let's see. So I plan to sell when she comes up here. All I have to do is set a sell limit, and in fact, she has already started that sell. She has already. So let me sell here. Let me use 10 contracts, 100 contracts. Okay, sorry. And if I click a sell, I can actually start selling here. Right now, market seems to be slow, so we don't have much to trade. But I hope you understand what I'm saying. I hope you understand how to use your calculator and know the correct lot size and how you should just risk 1% of your trading account. That way you have chances of entering the market. As you can see, I'm already making $130 from this trade. This is a live trade. All right. So I'm already making $130 from that trade. You can see it has moved. So I just went in with a sell. And I'm selling and I'm making money already. So you can see my strategy gave me 1:3. My strategy gave me 1:3. My strategy gave me 1:3. So if I'm willing to risk $100, by the time it hits my TP, I'll be making $300. All right. So you see the beauty of risking. So this is how you make money here. So I'm going to just put my TP here. I drag it down. You can do same on your MT4 or MT5. And this is where I plan to lose my money. Okay. So if you look closely, you can see if I lose 642 and make 1,474, this is a good risk to reward ratio. This is almost 1:3, if not 1:3. All right. So my strategy matters a lot. Your strategy matters. I can see my money is increasing. I'm making money live. So anybody that has actually taken this trade should be in profit. All right. This is the 5 minutes framework, the 5 minutes time frame for Ethereum USD. And that is how we make money. All right. So I'm just going to stop my recording, and then I will need you all to ask your questions. All right. Just give me a second.